A victory in the High Court has been the major contributor to a $900 million turnaround in the fortunes of building products maker James Hardie. The company has unveiled a full-year net profit of nearly $600 million. And a handy $490 million came in from a tax return after a big win over the Australian Tax Office. Andrew Robertson reports.
The headline result may have looked impressive thanks to the tax office, but James Hardie boss Louis Grease knows it's been another tough year.
Net operating profit, excluding the asbestos and others, very flat in the fourth quarter. Up on the year mainly because the tax rate was better, non-US was better, US was pretty flat.
In Australian dollar terms, sales were up 5% to nearly $1.2 billion. Net profit of just under $600 million follows last year's loss of $337 million and was boosted by the receipt of that $390 million from the tax office after James Hardie won a long-running court battle over capital gains tax.
We thought they did a good job in a tough economic environment, particularly in the US. In the March quarter, they grew their volumes by around 14%, which I think in the context of a weak US housing market was a good result.
With the building industry in its key markets remaining depressed, James Hardie is predicting another difficult year ahead, although Louis Grease sees light at the end of the tunnel in Hardie's biggest market, the United States, where signs of economic recovery are growing.
2 years ago, we had a false start. That was driven by tax incentive. This year, it's more real. It's more fundamentally sound as far as how it's happening.
However, when he looks into that same crystal ball, Mr Grease doesn't see any good tidings for the beleaguered Australian building industry.
Over the year, we're anticipating that we will be down a bit in Australia on a much softer market.
James Hardie will pay a total dividend this year of 42 US cents a share, and it's announced a new share buyback program of up to 5% of its issued capital. The company will also gear up its balance sheet to invest in its businesses, but with one eye on keeping shareholders happy.
We're going to have excess cash. We're not going to do a major acquisition, so we're going to give it back to shareholders. That's how it's going to work.
But shareholders want more. Deutsche's Emily Benke was disappointed in the second half dividend of 38 US cents a share.
Given the refund from the ATO as a result of winning a court case, that potentially they could have paid a little bit more. However, I think that the reason behind that was they were wanting to be conservative.
The size of the dividend and Hardie's less than optimistic outlook for the current year saw its shares lose 1.5% on a day when the market was up.